that's why the SADC community has spent a lot of time aligning regulations and laws to assist cross-border activity. It's why it's got a long-term program for harmonisation and development of the region. And I think payments has to play its role in that activity. So there's a sort of very broad, long-term agenda that we can see there. But I think you can think about it in a very practical way as well. So quite apart from that sort of public policy ambition, if you like, one can think about this in very practical terms. It's quite hard to get a good handle on how many cross-border payments there are in Southern Africa right now, particularly in the SADC region. But we at Banks of Africa have been doing some guesswork on that to see where there are opportunities and where maybe we can help a little bit. And I think at least one way to think about this is to look at the remittance population. So if you think that SADC has around about 7.5 million people who are immigrants in the sense that they are from one country in Southern Africa and are now residing and working in another country, and something like 4.5 million of those people will be regular remitters, just to sort of size the market in a broad sense. One thing you notice pretty quickly is that the corridor of payments into and out of, particularly out of South Africa, into the other countries in the region is quite a large proportion of that, maybe 2.5 million of that 4.5 million people in our estimation. So an element of this picture that I think is helpful is to try and size the current market population. And we think that leads to something like 80 million transactions per annum just within the region, of which a good chunk, probably more than half, are between South Africa and another country. I realise those numbers aren't very precise, and indeed there are many other ways you can come to an estimate here. I'm not here thinking about, for example, business-to-business flows of payments, which will also, I think, be important to consider. But in terms of volumes, I think the remittance market is where the bulk of the activity is, and where I think there's an opportunity to do some good because the costs involved in those remittances are quite high. So that gives you two different perspectives for why we should compare the long-term economic development of the region and a very practical problem about trying to improve efficiency and reduce costs for existing cross-border flows. A big chunk of those flows is probably still in cash, and the costs therefore are hidden inside the costs and risks of cash, including crime, including loss and so forth. So maybe with that sort of general context about why we should be interested in trying to do something in this space, I'm going to get the panellists to give us some opening views. Can I start, please, with Francis with a sort of brief statement of how you see this general area? Francis, if you would.
Thanks, Chris. Good morning, everyone. As you have rightly put it, Zambia, we are a land-linked country. We have 8 countries around us. And we have citizens in all these 8 countries around us. And there's a lot of money movements from Zambia to all these countries that are around us, and in particular, big economies in the region, like South Africa. As you rightly put it, we can't ignore the demand side of cross-border payments because it's already here. Now, the people participating in this environment have created for lack of a better, for lack of an existing system, they've created their own system. Like currently in Zambia, you find that if there's a family in South Africa who needs money, the guy would rather say transfer that money to a colleague in South Africa, then I'll transfer money within here to your family and so on, just to avoid that cost of cross-border payments. So there's money moving in that side and this side. So equally, the guys that are doing business in Zambia today, in Malawi, in Tanzania, and so on, they've equally got a system where money is put on the bus, money is sent through other channels and so on. Of course, there are these expensive channels that already exist, which people want to run away from. And I'm sure the focus of this cross-border payments is to make sure that money moves quickly, money moves timely, and at a cost that is acceptable. Most importantly, what is happening here is there's that's on P2P and B2B, P2B, and so on. All these guys involved are taking risks in moving money across borders. There are times when money is lost, goods are lost, and so on. And there's no fallback. Who's going to sort out this problem for these guys? I think I'll end here and leave my colleagues also to add on.
Okay, thanks, Francis. You've raised some interesting issues there, particularly about the sort of homegrown systems, as it were. Left to themselves, people are going to develop their own framework for doing this. I think I'd like to explore that a little bit further later on. Gertrude, perhaps if you could give us your opening views.
Thank you very much, Chris. I'd like to agree with both Francis and Chris, but I also want to add another element to this. When you look at economies in Southern Africa, as Chris rightly pointed out, we do have a lot of immigrants moving, especially in Malawi or probably most of the sub-Saharan countries to South Africa. But then in addition to this, we know that at a global level, the world has achieved globalization when we talk about economics, where we have got imports and exports. We have achieved that as well. We have also achieved movement of capital from one country cross-border. And then the remaining element that we want to address is where we're talking about payments. Now, when we talk about payments, why is it very important that we should create connected economies in the world, and especially in Southern Africa? And the reason is, apart from us doing trade with each other, but then we also look at, when we comes to the consumers themselves, the users that Francis talked about, where they have created alternate remittance channels that probably are not formal, they're really hard to track. And for policymakers, it becomes difficult for them to make policies and to come up with economic policies to be able to track this and to implement some policies in the country as well as in the region. It is very imperative that we should have connected economies, because apart from making payment convenient, but I feel that it also offers opportunities for small businesses to also flourish, because payment becomes instant or real time. It also, as a region, it gives us an opportunity for us to collaborate as well as innovate, and in doing so, increasing the use cases that we can load on the remittance corridor. Chris and Francis, you agreed on the point that where you have got several remittance corridors into a country or going out of the country, it becomes very expensive. One way of trying to curb and reduce the cost of remitting funds outside a country is whereby you have not necessarily a single channel, but you reduce the channels, the remittance corridors, to where we're talking like in SADC, in Southern region, we're talking about the TCIB project, whereby we are recognizing the fact that the various countries have invested into the payment infrastructure, and these payment infrastructures can talk to each other, and in doing so, reducing the remittance corridors, and then at the end of the day, we are reducing costs. Thanks a lot. I think for now, I'll stop there. Thank you.
No, that's great. That's given us some really good stuff to work on in a little while. But let's get a view from Brad. Brad, how do you see this from Bankland? Are you there, Brad? I don't know about other people. I'm having trouble hearing if Brad's there. Is anyone getting him? Yeah. He's on the line.
The voice, the audio is blared, yeah.
Yeah, it's tricky, eh?
All right, can I hear someone else?
Oh, there you go. Thank you, Brad. You're there. Perfect.
Better? Yeah,
yep,
okay.
Thank you.
Change the device. Yeah, so I was just going to say, I mean, so from a bank perspective, you know, and I think particularly Standard Bank Group is very committed to achieving its presence, of course, is across the entire SADC region, barring maybe one or two countries. that the importance of being able to be part of an enabling function to create better levels of trade, financial inclusion, and what the payment system brings to that is vital. So it's a very important and sort of close to our hearts as to what it is that we need to do to help enable that. I think the challenge we face is that the intent is there, and certainly the intent is there across all the stakeholders. But we've got to always remember that in the context of regional, to the points from the earlier speakers, the customer's looking, and if we look at it from a customer perspective, they're looking for cost, real time, and convenience. And that is all stemmed on the back of what is in place in terms of, well, you know, can I get it in any form factor? It doesn't have to be an account-based type transaction. It could be a mobile money or a remittance, and those have largely been filled by what we call closed-loop systems or closed-loop players. And to the point that, well, there's some of them are informal and some of them aren't. But I think what is important is if we're going to enable a cross-border payments, interconnected payments environment, we've got to bring those closed-loop players together as well. Otherwise, we'll end up with divergent systems as opposed to something that's beneficial at a whole. But notwithstanding that, I mean, remittances is very, very important to economies. The GDPs, based on the GDPs, they're a significant contributor. And I think that's really important for us to recognize that an efficient payment system that speaks to the customer intent is clear and is sort of achieved. I argue, though, that why have the closed loop systems come about? Probably because, well, there was a commercial need and there was a market need. And what has probably lagged is that our own historical legacy payment systems have struggled to keep up. And so they bypassed us. And what we've got to do in particularly national payment systems is to bring those back together again, because you want interoperability. There isn't, to my mind, enough volume and scale that you can have fragmented systems. You need those systems to be interoperable so that it's ubiquitous, you can get reach, and the customer can be served where they want to be served and not have to be served through high street banks, for instance, or infrastructure that they have to go and present themselves to. They want to be able to do it right, you know, down the street where they live, and be able to facilitate those flows. So I think there are a lot of moving parts, but I also think we're starting to get to grips with what those moving parts are that will allow us to bring a sort of centralized and an enabled environment together. I would just argue one more point, and that is that we mustn't underestimate what regulatory enablers can do to achieve that. Gertrude, you mentioned TSIP, or transactions cleared or transferred on an immediate basis. I think it's an excellent initiative, but it does have some challenges because it can't be an immediate service until we've got regulation that fits that purpose. And we need to get that aligned. And you'll see that the alignment is, well, it's a political and will type inevitability that we need to try and achieve. I think I'll stop there.
Cool. That's really good. I think we're developing a very interesting, multifaceted picture here with the different perspectives. I'm glad you raised the regulation point, but I'm feeling there's a strong connectivity between the comments here around this sort of path to a better solution. I think everybody's roughly saying, got to get rid of these closed loop, multi-fragmented things and move to something more multilateral. But the exact path to get there and who does that and who helps is really still, I think, very unclear. And there are many, many different possible pathways there. And if you look at the overseas examples globally, you can see a whole bunch of things that have been tried and sometimes not very successfully. So this may not be easy for us. But look, let's hear from Titus. Brad raised the regulatory challenge, and I think Titus may be able to help us a little bit with that. Titus?
Yes, good morning, colleagues, and good morning, everyone. interesting topic for discussion, interconnected economies. I think from my perspective, in SADC, there was a vision to integrate the region from financial integration point of view, not wanting to go back to history in terms of the strategies that SADC had, but there has been concerted effort from regulators, from central banks, from ministries of finance to have the region integrated. If you go back 10 years ago, in the region, there was no integrated payment systems. Cross-border payments were flowing via correspondent banking arrangements. Remittance funds were flowing via taxis, or you would use your Western Union as an example. And during that period, the cost and the speed of transacting cross-border in SADC was, the speed of transacting was long, in some cases T+3, and the cost for transacting was very, very high. Then the governors in the region in about 2005 informed the SADC Payment System Committee that they should put effort into integrating the region. To cut the long story short, the result was that a system was implemented in the region, which was known as CIRUS. Today it's called SADC RTGS. And what that system does, it integrates payments from the participating countries and banks in real time. To date, in the system, we have the 15 countries participating in the system, but the level of participation obviously is a different question. If you look at the statistics from the system since its inception, trillions of rands has been settled on the system, and over 1 million cross-border transactions have been settled on that system. So from the, or taking at the back of the theme for discussions of interconnected economies, I think to some extent, the regulators have provided a platform to interconnect these countries and the economies of the countries. And as my colleague Brett said, that some of the countries, when you look at it, the GDPs of those countries are dependent on the flows from utilizing these platforms. However, in terms of the implementation of the interconnected payment systems in the region, it is not without its own challenges. We have successes in terms of interconnecting the high value payments, and on the low value payments, which is what the colleagues have mentioned on the remittances. We've got plans. There is an infrastructure that is in place, as my colleagues have mentioned, the TCIP infrastructure, but it does not come without its own challenges. There are challenges that we still need to resolve to get it working better. As my colleague Brett said, that one of the sticking points around the TCIP platform is the regulatory environment, where you need to get these payments to flow in a real-time basis to an extent that the customer experience is enhanced. The issue at hand that we have is that the challenges are not particularly or spread throughout the whole of the SADC countries. It is in some countries or in some markets where you find that you have these regulatory blockages, which need to be resolved to an extent. But I hope in today's discussions we will touch in those challenges that we have, and hopefully by the end of the discussions we might put practical solutions on the table, or from our audiences we might get some ideas on how to go about resolving those. For now, I will pause, Chris. Thank you.
Thank you, Titus. That's really interesting. I think you rightly point out that two of the things that regulators have to do provide some sort of settlement plumbing, if you like. And in the SADC region, we're doing better on that than a lot of regions, actually, because of the CIRES development and the fact that we do have the sort of, at least the basis of that plumbing in place. And also to do the harmonisation, which I think is a sort of work in progress, if I can put it that way. There's some good work done and some more to do. I think the third thing that might be a bit challenging is what I think of as sort of nudge regulation. How do the regulators sort of encourage the market to behave in the right kind of way to develop the cross-border infrastructure? And this is a much sort of trickier and more subtle thing. It's not hard-edged, and yet I suspect we're going to need a lot of help from the regulators to be sort of market supportive when the time comes. Perhaps we can talk a little bit more about that in a second, but I better get something from John. John, are you there?
I'm here, Chris. Yeah.
Perfect.
Yeah, I suppose although I spend a lot of time in Africa, particularly in East and West Africa, I better talk really about places like Europe and Asia, because they're, sort of coming outside in. So in Europe, I think even in Europe, people wouldn't disagree with the notion that, efficient cross-border payments is really important. And that's kind of what led to one of the reasons behind things like a single European currency, and which was a regulatory ambition and a public policy plan to take out a lot of the frictional cost of doing business between countries. So I think everybody agrees on the ambition. It's just a little bit of a shame that it's so difficult to do. And so in Europe, it's a fact that in most countries, domestic payments are okay. I mean, they work. They may not be brilliant, but they actually work. It's the cross-border stuff that's a problem. But when you look at the volumes, even between like two big countries like France and Germany, there isn't enough volume to make it possible to build a sort of unique cross-border system for them. So therefore, the regulators now got a challenge. So they, in fact, you either accept that you build a sort of for a very, very limited volume, market problem then, because you're not going to, or you try to interfere with the national economies. And effectively, you do what the European regulators wanted to do, which is to smash up the domestic systems. Because otherwise, you're not going to get the harmonization that you need. So instead of interlinking, they've almost set out on a sort of 15 to 20-year ambition to destroy the national payment systems, which is a slightly odd way to go about it. And if you think about it, and let me just, I know we're talking about predominantly account to account here, not cards, but if you take cards, what they should be trying to do is link national card schemes in Europe, but they set out to destroy them and then gave the market to the Americans, which wasn't what they wanted to do. So there's some very unintended consequences of how you actually go about this. And that actually does bring you back to the thing, well, should you actually try to do it at a public sort of utility level? So what's actually wrong with letting the private sector do it? Because the best remittance operators, if I want to move money from here to my French bank account, I could go to my bank, who'll do it allegedly for nothing. Right? I could just go to a remittance operator like TransferWise or Revolut, who'll do it a damn sight quicker and easier for me. So the answer is, these guys are driven by profit. Downside of them is that, and it's user, Titus was talking about being user friendly. Yeah, it's really, really easy to use. And therefore that's good. It's not bank centric, which is probably also quite good. On the other hand, they'll only do the bits they feel like. So therefore what we've got is lots of capacity on the big corridors, and on the small corridors, you've got nothing. and you go to Kenya, so you can transfer money from anywhere in the world to Kenya very, very efficiently, apart from Uganda, which is across the border. So you've got this paradox. If you leave it down to the private sector will do what it thinks is economic and do nothing else. And if you leave it to the public sector will have a tendency to build this all-embracing, fancy, interconnected solution, which is going to end up being incredibly expensive and with not a lot of volume. I think if we could work out the best combination of those two approaches, we'd be in a good place. And at the moment, what I see as I go around the world is people not quite sure which of those two approaches to use.
Okay, that's fantastic, because it does rather pick up a lot of the elements that the other panelists have been talking about. So those people out there in audience land, do please raise questions or issues. If you haven't got questions and you haven't got things you want to explore based on the very good opening statements we've had from our panelists, I don't know what's wrong, because I think that's raised a great menu of issues to talk about. But look, what I want to do, I think, is pick up on the interesting pathway point that John made around, do you let the private sector do this? Do you have a very government-led European-style approach, not necessarily actively destroying domestic payment systems perhaps, but at least trying to do it in a very public policy coordinated way? Or is there a middle path? And if there is, what might that look like? I'd be really interested in the views, particularly of Gertrude and Francis here, because you guys are running national payments infrastructure there. You've got day-to-day challenges of the country's needs in terms of payment systems, and here we are talking about how we do something that expands on that builds on that into the broader sphere. Also, probably like me, a big part of your job ends up being sort of mediating between the public sector's desire for various policy outcomes and the needs and desires of the banks and the other financial service providers in your area. So maybe, Gertrude, do you have a view on that? Do you think there's a pathway here we can pick? How do you see that working out?
Thank you very much, Chris, and all the panelists. Yes, there is. And I'm just going to share with you the journey of the national switch and why it was implemented. The reason why we implemented a national switch, it was one of the interventions was resolving issues to do with financial inclusion at a national level. This comes from a background where the majority of Malawians are not banked. That is the adults that are bankable, or they're underserved. And now the government of Malawi, working in collaboration with the central bank as well as the private sector, that is the financial institutions, they looked at the gaps that existed in the country. And one of the gaps that were noted was infrastructure. Now, when we're talking about financial inclusion, national switches will not resolve financial inclusion on their own. There are several factors that need to work together and in combination in order to achieve financial inclusion. But one of the outcomes of that analysis was a need for interoperability at a country level. And this is where we went ahead and started working on a national switch. Now, at a governance level, the way that the national switch is structured here in Malawi is that it is purely owned by the private sector, in as much as it is supporting government initiatives in resolving issues to do with financial inclusion. And the government, through the Ministry of Finance and the Central Bank, Reserve Bank of Malawi, have a greater interest in the success of the national switch. It is run, governed, as well as owned by the members themselves. So currently we do have all the commercial banks integrated to the national switch for card-based transactions. That is on ATMs and point of sales. And we have the mobile money operators integrated to the national switch as well for wallet to wallet, as well as account to wallet and wallet to account. We're also looking at other aspects where we can also integrate microfinancing institutions, as well as the savings and credit cooperatives. We are at an advanced level to integrate them as well. But then when you're looking at national switches, we're just talking about at national level. There is indeed a need for us to extend that interoperability to reach out to other countries. And this is where connected economies is very critical. Now, John talked about the single euro payment area for the Eurozone. And I think there are some lessons that we can learn from that area to say that how did they achieve interconnectivity of about 28 countries or so. And now looking at that, that case, you see that there were some independent bodies like the likes of the European Central Bank that played a greater role in terms of setting the agenda, in terms of facilitating the discussions, stakeholder alignment, making sure that they do have commitment to that project. And these are some of the lessons that we can learn. Now, when we talk about, that is for connecting economies, but then we can also learn from Southeast Asia, where the economies were not, probably about 10 years ago, were not as developed, but then they are doing so well in as far as digitization of payments is concerned, probably better than most of the countries, apart from the Nordic countries. Now, you look at these countries, you see that, yes, regulation can play a role, but in other areas, regulation has been like trying to catch up with the developments that are taking place. And for that to be made possible, the regulators, the government, they need to come up with policies that really facilitate all these developments to take place. You look at, you see that in Southeast Asia, we have got private companies, the internet giants that have come into the payment space. So when it comes to facilitating integrations and so forth, it isn't just part of regulation or laws and so forth, but then the whole industry needs to talk and they need to be on board. They need to talk to each other. They need to be engaged. They need to form part and parcel of these discussions, of these developments, of these implementations. So those are just the a brief of what I can share with you based on our experiences here in Malawi and what we have seen happening in other countries. Thanks a lot.
Okay, but let me, and this is really just a pointed question just to get the perspective. Where in your listed priorities as a national switch would the cross-border bit come? You've got many other things you want to achieve domestically, right? Including financial inclusion, investment innovation, all those things that you mentioned. Is cross-border stuff high on the list or not very high on the list? And why in either case?
So currently for Malawi, thanks Chris, currently for Malawi, cross-border remittances is at the top of our priority list. If you posed that question to me about 3 years ago, probably I would have told you that let's wait. And the reason why I'm saying now it is a priority for Malawi is because we focused on integrations in country. We have achieved those integrations. But then someone else, some of the panelists pointed out the fact that we do have a lot of remittances that are inflows that are coming into Malawi, and they do have a huge impact on the GDP of this country. And for that reason, if the longer that we delay in allowing this to happen, we are inconveniencing the consumers. And for that reason, we are facilitating the unofficial or defragmented channels that have been created out there in trying to bridge that gap that exists in the economy. So for now, it is on the priority list. I think there was a time when we actually came to through other channels to say, I think in 2018, where we said, I think we are ready now to do the cross-border remittances.
Okay, perfect. Thank you. Francis, I'm interested to get your perspective from Zambia on the similar sort of topic. Where does this cross-border challenge sit in your list of priorities, and where do you see the role of government in either helping or hindering? How would you focus on it?
Yeah, thanks, Chris. Like Gertrude said, internally, in terms of payments, we're almost about the same page. For us, we have taken it as a national project where every payment system has to interconnect through our switch, and we're providing interoperability to all payment players in the country. So all the banks are involved, it's a must, and all the payment players are involved, it's a must. The telcos, it's a must. Yeah, but in terms of cross-border payment, I don't see it on the list or the priority list of our government at the moment, because if you look at some of the players in the market, they are taking it upon themselves to create initiatives for cross-border payments. If you look at the telcos like Airtel, I can send money to Malawi today and vice versa and so on. Then just yesterday, there was an announcement that Standard Bank Africa and Airtel Africa partnered for cross-border payments in the region and so on. So
does that worry you? Sorry, but does that development concern you?
Yes and no. Yes, in the sense that here's a telco. Airtel is the biggest telco in this country, and this is what they're doing. Okay, yeah. And if you look at the e-wallet of the Airtel, the money sitting in there, it's larger than some of the smaller banks that we have, and yet there's no regulation managing these telcos to say if they exceed their monies beyond a certain limit, how do we manage them? Because they're growing bigger than some of the banks, okay? And they're involved in local transactions, and they're also involved in cross-border payments. So that should be a worry to government, because this is a fragmented system, but that's not what we want, because for them, it's making money, it's business, they're capitalists. But we want a system which will provide economic growth for the nation and the nations around us. So that should be a worry. So we haven't seen much in terms of policy regarding cross-border payment. It's like we're comfortable with the existing MoneyGram, the Western Union, and so on, which only cater for people at that level, and so it doesn't cater for the majority of the monies that are moving in the region.
Yeah. Okay. So I'm sort of getting this sense that there has to be a big weight of public policy direction in Southern Africa if we're going to make progress in this space, but it probably needs to be quite carefully applied to the market, because otherwise we'll get the kind of problems that John described in Europe, for example, where a great deal of money gets spent on stuff which doesn't seem to be helping all that much to solve the problem, and maybe even inadvertently causing damage elsewhere, right? I'm not suggesting that's happened in Southern Africa, but I think it's a sort of cautionary tale for policy intervention in this space. You know, Brad, I'm kind of interested in the banking perspective here. I know the banks are very wary about governments insisting that they spend a lot of money as banks on payments infrastructure that doesn't really have a commercial case for the bank, right? Yeah. And that happens quite a lot in all contexts, but particularly in the African contexts. And how we can find a better way of doing that, you know, what's the interaction that should happen between government and the public and the private sector, I should say, that seeks to avoid that outcome? We all spend a lot of money on something that isn't working that well because it hasn't got a commercial case. But equally, we avoid the opposite problem, which is that we only focus on the stuff that makes lots of money and ignore everything else, right? Where do you see that working from the bank perspective, Brad?
Yeah, so thanks, Chris. It's an age-old conundrum, yeah. Isn't it? And yeah, no, the banks are obviously, and particularly in the current day and age, wanting to invest in places where it is obviously going to be beneficial. What I was interested in is, and I think it leads to a response to your question, is perhaps take the separate example or other parts of the world, and you start seeing that the sort of regulatory drive to put in infrastructure versus I've got someone calling me, versus perhaps the role that a policymaker and regulator should play, should be separated. So what I'm really trying to say here is, so we look at this and we say, well, we don't want dominance, right? So typically the Airtels and the EcoCashes and the M-Pesas of the world, they dominate, and then it gets very difficult because the interoperability is not in place. But at the same time, they've gone ahead and done it commercially. So maybe my point is very much around, well, should the commercial entities be allowed to be commercial? And should the policymakers make sure that the approach is kept within a framework and enablers put in place to ensure that it doesn't end up where it's dominated or dominated by one particular party, but allow for the freedom to commercially drive an outcome. And that's what we've seen very much in even the SADC region, for instance, where clearly there is a commercial need, and the market have responded to that, and they've created cross-border remittances and money transfer operators and so on and so forth. But also, it's because of that now we're saying, well, we should bring it in under some sort of regulatory construct, right, and create regional and regional infrastructure. But maybe let the market do what the market wants to do, but put the boundaries there in terms of the policy and the regulation that enables that and continues to stimulate that. Because what worries me is and we've seen it, the SADC region has had its payments sort of strategy in place for many, many years. It dates back a long time. But it struggled to get traction. It struggled to really prove itself. And yet on the periphery, there is this stuff is happening, right? The market's moving. Things are happening. There are payments. Yes, they're fragmented. Yes, there are closed loop. But it's happened. And it continues to happen. And it's almost like the sort of slow regulatory enabled element or sort of centrally driven infrastructural element is not going to catch up. So maybe it doesn't need to catch up. Maybe it should be, let's leave that and let's create enabling policy that drives an outcome that doesn't prohibit new entrants, opens competition, but lets the commercial side take care of itself without being a negative outcome because of the dominance factor.
Yeah, no, I really like that, and it's kind of what I was trying to say. You said it better, but I was trying to say about nudge regulation. The idea here should be try and point the commercial activity with its built-in commercial incentive sort of in the right direction, rather than tell it what it can and can't do, whether there's a case or not. Exactly how to do that is kind of an interesting question. I'm going to go and ask Titus and John for a view in a second, but I sort of have an idea here that maybe you could say, as a group of regulators, yes, by all means, establish any kind of cross-border business that you want, wherever you see a business case. So pick up that commercial element. But if you're going to do that, we're going to ask you as a condition to interoperate with somebody else. We're going to make it, or put some other regulatory condition on it, which doesn't destroy the case, but actually creates that sort of harmonisation, that sort of moving together that we want to achieve. And then we try and encourage the commercial operators in their various groupings to work down that path. Titus, do you think that would work? Can you see the regulators being that flexible?
Yes, interesting comments from my colleagues. From my perspective, Chris, you have two things here. One is the commercial interests of the private sector. Then the other one, you've got the public policy objectives of the regulators. And these two entities have got interests. One, from the regulator's point of view. As an example, Gertrude mentioned financial inclusion. Financial inclusion in SADC is a public policy objective. I mean, there is Absolutely. A strategy in SADC around financial inclusion. It is on the agenda of G20. It is on the agenda of the BIS. And it's an example. In BIS, there is a task force that looks at the payment aspects for financial inclusion. And one of the objectives that you have there is that you must have collaboration between the private sector and the public sector. you cannot just let the public sector loose to say, go and implement a cross-border system as an example. My personal view there is that what you would end up with is that you will end up with a situation where you have today of closed loop systems, either operated by individual entities, or you'll have a group of entities operating on those closed loop systems where other players in the market are excluded from participating in those systems. Alternatively, you might have barriers that the private sector or the commercial entities create to an extent that you don't have new players coming into that closed loop system.
Yeah.
Then what you end up with then is that you end up with systems which will be termed to be functional in inverted commas, whereas those systems are catering the needs of a certain sector of the population or certain sector of the market. My personal view here is that then you need to have that collaboration between the regulators from public policy point of view, and to get the interest of the commercial entities. You need to have that level of that level of engagement and collaboration. The other aspect that I just want to bring to the table is that one of the challenges that we have inside it is the level of development of the different countries. As you know, I mean, we've got South Africa sitting here, and then we've got other countries sitting at another level. So you do need to have the regulators coming on board and to subsidize to some extent the plumbing, so to speak, of the interconnected payment system, so that those countries that are less developed, then they can hook onto that system, and then in so doing, then you can address those issues of closed loop systems. You can address issues of interconnectedness of the system. From the web. Apologies about that. Yes. So that is my view, Chris, is that you need to have that close collaborations between these entities, the commercial sector and the public policy makers, collaborating in ensuring that there is a common view of where they need to get. Thank you.
Thank you. So I'm going to get a very quick comment from John, because he started us going down this path, and I want to know whether he thinks we're getting anywhere. But there is a really good question on chat, which I'd like to come to before we finish. So John, just a quick one if you can.
Yeah, I mean, Chris, I think the panel, where I come from is, I mean, I'm pretty instinctively lined up with Brad. I kind of think the regulators should do as little as possible. And probably making it clear what's unacceptable rather than trying to say what the right solution is. Never heard a great idea come out of a regulator yet. But I realize something Gertrude said, which is the way they've done it in Malawi. And the other place you should really look is in Morocco, where they've actually decided the banks are not good owners of centralized infrastructure, which I passionately believe. I think they're bad owners because payments doesn't equal banking. Payments is much, much bigger. And if you're going to have infrastructure at a national level, why would you let one group called the banks run it? So there, the central bank said, they passed one regulation that said, basically it's going to be run by somebody else, anybody other than the bank or a telco. Everybody interconnects through it. And really the only regulation there is that nobody can connect to closed loop systems and destroy the economics of the central system. So I think it's a really interesting approach, and I'd love to talk to Gertrude offline about how they're doing it, because I think, you know, we tend to look at these big economies thinking like Europe, thinking they've got it right. I see a bunch of stuff happening in Africa that actually makes me think that there's this knowledge transfer going the other way wouldn't be a bad idea either.
Terrific. That's really interesting. And as usual, of course, I feel like I want to explore a whole lot of stuff there, but we haven't got the time. There's a really good question on chat, and I just want to get a quick reaction from the panelists, anyone who wants to have a go. How critical do you consider the issue of a central currency to the issue of creating connected economies? Does the currency problem really enter into it here? We haven't discussed that yet. Anybody want to have a go at that? Gertrude, you're shaping.
Yeah, thanks a lot, Chris. Currency is a big issue indeed. And because when we're talking about interchange of payment messages, at the end of the day, there has to be settlement. And when you look at Southern Africa, most of the countries, not really all, we do have all our own local currencies and so forth. Now, coming to agree on what currency we're going to use becomes a challenge. I know that in SADC we have resolved that issue. But then the other issue is remittances when they're coming in foreign currency and so forth. We do have on the other end a risk on foreign exchange rates and so forth. And usually those risks in terms of cost, the cost perspective, gets to be passed on to the consumers and so forth. So yeah, I want to agree with the person that has asked that question, that has made that comment. Currency issues, it's a big issue when we talk about interconnected economies. Thank you very much.
Chris, just a quick comment from Europe. I mean, if you go down the single currency route, I mean, you've got to be prepared. That is one hell of a big decision and journey. And you talk about unintended consequences, and they are legion. But I mean, you know, one of the dangers of payments is we love to talk about messaging layers and, you know, real-time responses and stuff like that. And yet we should spend as much time talking about fungibility and liquidity management and stuff like that. And there are very few organizations that are actually capable of moving. You can move dollars into Naira or Rand or something like that. You try and move Kwacha into Kenyan shillings without going in and out of the dollar or the euro or the yen. It doesn't work. So, you know, most of those organizations, there are a few that are taking it on, people like Crown Agents Bank and stuff, but, you know, I think it's a really, really important piece of the puzzle. And we shouldn't just get taken up by messaging layers and response times and stuff like that. If you can't make the currency side of it work, then it's, you know, it's a big issue. But, you know, I wouldn't, I see Oromei from Nigeria asking that question. You know, I'd go there very, very slowly to think about having a single currency.
Yeah, it's obviously important, isn't it? But it's a question of timing, really. I think that's the challenge there. And it's such a big job. Look, I'd love to keep talking. We've got lots of other stuff that we could talk about. There's a good question on chat about telcos versus banks, which we could spend the whole hour on easily all by itself, I think. But what I think we should do now, given we're very close to the hour, a couple of minutes, is just in a very short space, 30 seconds, no more. What's the one thing you'd like to see happen next to the panel on improving the cross-border payments infrastructure in Southern Africa? So the one thing you'd like to see happen next. Can I ask Francis first, please?
Yeah, thanks, Chris. For me, what I want to see happen is what John mentioned. Let the regulators sit and just focus on what is right, because regulators are not on the ground to see what is going on, and sometimes it becomes difficult. This I've noticed even when some years back I was involved in bilateral discussions with colleagues in other countries over just trade goods, crossing borders and so on. It's a big challenge for regulators. So if the private sector could come in and just ensure that this thing works, like we're trying to do on the TCIB, but again, regulators are involved. Normally regulators slow down the process because they want to understand the nitty-gritties of whatever process, what is involved in the process. But if there's a private sector coming up from all the nations involved, they can easily come up with a product that can be delivered. And ideally, because private players balance both being economical, doing business, and also providing the service.
Cool. Thank you. Brad, very quickly.
My view, it's all about the
Oh,
customer.
you're on.
Let's start.
Ben?
Yeah. Now, my view is it's
You
all
good?
about the customer. Can you hear me?
Yep, perfect.
Yeah. So all I would like to say, let's start with the customer, because that then allows us to respond in the right way when we serve them in terms of the payment systems that are put in place, and the capability that will bring the benefits to the economy, both at a trade level as well as a financial inclusion level. So let's start with the customer in mind every time we have these conversations, because I think the outcome will be far better.
Lovely. John?
Nothing to add to what Brad said. It begins and ends with the customer and people actually making money out of serving a customer. Get the customer right, you'll make money, and then I think that's a good place to start, and then you can corral it into some sensible architectures later.
Okay, Titus, I suspect you might have a slightly different view. What's the next thing that should happen?
Yes, from my perspective, Chris, I think that it should be noted that as I've mentioned in my earlier comment, that the interest of regulators and interest of the commercial entities are not mutually exclusive. We are here to serve the interest of the customer. So there needs to be that closer collaborations between these two entities in order to serve customers. Thank you.
Okay. Gertrude, I'm sorry, we're absolutely out of time, but if you've got one last word.
Thanks a lot, Chris. I want to agree with Titus that there is need for stakeholder engagement to get commitment. We need to start finalizing on the pre-integration issues in the next 6 months, I hope so that we can focus on the actual integrations at a technical level. So stakeholder engagement is very key in as far as I'm concerned. And as Titus has pointed out, the regulators as well as the private sector, we're driving a common agenda. So let's all work together and make this happen. Thank you.
Perfect place to end. Thanks a lot, guys. That's been really good. I hope the audience found that helpful. Thank you.
Thanks, Chris.
Thank you.
Thank you so much, the moderator and the panelists. I'll see you guys in our next panel. You can toggle on the platform if you need to do some networking or attend any other session. For me, I'll see you at 11. Thank you.